Hello and welcome to my YouTube channel. I wanted to talk to you about how to get approved for you to buy your first home. The first thing that I wanted to let you know, it is recommended that you have a 650 FICO score. Now, I know that you're gonna find on the internet that you might need only 580 or 540 depending on, well, if you are gonna buy it as a first-time buyer or, well, FHA loan. But most of the banks, even that they're gonna have that on their websites, they're gonna actually feel more comfortable in giving you the loan if you have a FICO score of 650. The second thing that you also need to be careful with, it is with your taxes. The best thing would be if you plan ahead of time. If you, in your last 2 years of tax returns, you have a good income. But the most important thing would be if you declare that you netted a good amount of money. When you compare that with your income, that's another thing that the bank is going to use when they are going to see if you can have $200,000, $300,000 loan approved for you to buy your first home. So this is an example. You make $50,000 a year or $60,000 a year, but you only declare $1,000 or $2,000 as a net income after all the expenses. The bank is not going to give you a loan because they are going to think like you cannot afford any more debt. Now, if you have $60,000 in income, or between you and your wife, 60, 70, and you declare that you had a net income of $20,000, they're gonna see that as something good and possible. Another thing that they look at, it is your income to debt ratio. That's how they call it. So let's say you make only yourself or in your household, let's say $5,000. Now, $5,000 would be the income. They will want to see the debt to be in between 40 to 45% of the income that you have each month. So that means rent, car payments, grocery, restaurants, credit cards, everything. Student loans. What are they going to do with that? It is when they have 45% as your debt, they're going to consider the other 55% of your income, and they're going to take that and see, okay, so this is the amount that we can play with. He can afford a $2,000 mortgage payment each month, including everything, including insurance of the loan, property taxes, insurance of the house, flood insurance, and everything else. As a result, the total loan amount that you can have. Having a good credit score is going to help you in getting this loan. But also, if you do your taxes correctly, it's also going to help you with that. And if there is a way that you can, for example, you have some expenses and it is more than 43-45% that they need, then if you can just put some of those expenses under somebody else's name, that is going to help you to get approved. So once you get your pre-approved letter, it is the perfect moment for you to have somebody with you helping in seeing all the options that you have on the market. So the best thing that you can do, it is already have a realtor in mind. If you have a friend that is a realtor, or if you know about somebody else that is a good realtor to help you, contact them, tell them that you're in the process of getting a pre-approval, and then as soon as you get it, then you can start looking at the houses, because you might want a house, or you might think that you can qualify to have a $500,000 loan. But then if you go and apply first with your bank, then a credit union, and I also recommend, if you know of a broker that does this type of loans for homes, then use all those three options if you can, and then you're gonna decide what would be the best loan for you. You might have a cheaper rate with one, but then a better loan amount, more money for you to buy a home. So that would be one of the couple steps that you need to make for you in order to buy your first home. Thank you guys for watching my video. If you like it, please subscribe, click the like button, and see you in my next video. Talk to you later. Bye.